Here are 3 patterns that are going to tell you when the trend is over, and these are going to keep profits in your pocket, because when you start seeing these reversals, you'll know to exit the stock. By the end of this, you are going to fully understand trend, volume, and ugly face patterns. Let's get into this first one. So if you come over here to Google, we're dating back, and I'm going back to 2024 here because I want to show you what happens on a long-term trade. I think it's so much easier for new viewers and experienced people to understand a long-term trade versus a short. Learn the long-term first, then understand shorting. So if we just look at this, we're going to pay attention to the trend here. Trend is the only thing we're going to pay attention to here. And you can see we are back in here in 2024, late 2024, we were coming through the sweet spot. Now, what is the sweet spot? The sweet spot is the area where you have the highest probability to make money. And these are those horizontal lines. On the top, it's red, it's at 80%. On the bottom, it's 32%. So in between those two areas is where you have the highest probability to make money. And remember, trading is all about probability. You're trying to give yourself the highest chance to make a lot of money and not lose it. Now, you're going to lose. There are going to be losses. You need to mitigate those losses. But if you trade within the sweet spot, that's where you're going to have the highest chance of making money. So if we're in the sweet spot here, we're coming through the sweet spot. We did this for quite some time. This was in the sweet spot from, let's say, October through, let's get into the overbought area, through February. So that's 4 or 5 months that this trade was going on for. And this was not that long ago. And ever since then, what has been going on? It's been going in the opposite direction. So you can see how you can go long and short. But when do you get in? When do you exit? Most importantly, when do you exit on that reversal? Let's talk about where we got in here. So if we're just looking at this chart, we like being in the sweet spot and we like having an engulfing candlestick. That engulfing candlestick was right here on October 30th, right before Halloween, taking out the previous highs. Now we're in the stock, okay? And when you're in this thing, you don't get in and get out, get in and get out. This is the weekly chart. This is a long-term chart where you stay in this thing as long as the trend tells you to stay in this thing, and it never told you to exit. When would it have told you to exit? If this red line dropped below the yellow line. Obviously, you can see that that did not happen when we were in the sweet spot. Now, you might say, well, it went up, it went down, it went up. It actually went below where the entry point was. So at one point, I was losing money on this trade, but why didn't I exit? Let's go back to what I just said. Never dropped. Red line never dropped below yellow. So we were in this thing. We stayed in this thing. We stayed in this thing for quite some time. And now the reversal happened. You can see here, we started seeing our red line drop below yellow. And actually, it dropped into the sweet spot going down. So when you get something going into these all-time highs, you saw Google tried to break into this all-time high once, twice, 3 times. Once we started getting up here, the 4th time, we knew that it wasn't going to make it, right? Because the volume wasn't there. We'll get to the volume in the next one. We knew that it wasn't going to make it. And we had this reversal happening. So when you have red drop under yellow, especially when you're going into all-time highs, really, really strong resistance points, that's when you go ahead and make your exit. Once you get that reversal coupled with what's going on at the top. And turned out to be a really nice trade because what happened subsequently, it just went down, down, down. Now you can see Google's trying again now. This is May, June. We're trying to get back up into these areas. Don't know if it'll happen. But the key point for number one and what you're paying attention to are these reversals. As long as red is above yellow, you're okay. Once red drops below yellow, take your profits, move on, go to the next stock, or wait for it to go short. Now, number 2, we talked about volume. Volume is so important in trading. It's the gasoline to the car. If you've watched any of my videos before, you've heard me say it. And actually, while I'm going to actually have both of these charts up here at the same time for this one, just so you can see that they're in the same time frame. So these candles on my right side are the exact same candles as my left side. The difference is we see the volume, but we also see the stochastic is very different. This is a daily stochastic. This is a weekly stochastic. So over here, we can trade very, very long term. This is more day-to-day type trading. 1 to 5 days, somewhere in there. We're trying to make money on the way up, make money on the way down, not do anything around the top, not do anything going into moving averages. But you can see the difference. You're constantly in and out over here, not in and out over here. Now, let's focus on the volume here. So let's draw in where our trade was. So this was our trade. Remember, we came through the sweet spot. Our entry point was right here. That entry point was right here. And then I'm just going to draw kind of a dotted line that takes us to this top area, okay? You can see the same thing. It's the same chart. Now, what do you notice here once we got to this kind of top area about the volume? Well, back in here, we had pretty decent volume. It was pretty consistent throughout. When you had this big fall in price, what happened? You lost a little bit of steam, but the trend never told you to exit, so we didn't exit. And then when you got up to this point and you fell back down, that was this first peak right here, and you fell back down. What happened to the volume? Well, the volume fell, right? Then you built up some steam, you came back up, you built up steam, same thing over here, came back down, what happened? Well, you lost a little bit of volume. You can see that little black area in there, that means that you're not touching average volume on a consistent basis. That's what that little black area means. If you're touching that yellow line, that means you're getting to average volume. Now, when we got over here, what did you notice about this chart? And I have it zoomed out for a reason. See that block of red right there that you don't really see all back in here? You don't really see a big block of red over here, but you do see it in here. That was probably 5, 6, 7 days in a row of selling volume. People were kind of done with the trade. And what did you see after the selling volume? I'm going to zoom in now. You saw that you kind of had this deceleration of volume, a little bit of a spike, and then it just completely fell apart. So how is this going to save you? If you pay attention to volume and you zoom out and you say, what's different? This is like the game you played when you were in 3rd grade. What's different? You get 2 of the same pictures. What's different? Well, this to me is different. You see multiple days of selling coming in, coupled with you started to see this rolling happening up here. You were getting to these highs that we talked about. Remember that steel I-beam? Remember that resistance point at the very top? When you put those things together, you can use the volume to say, yeah, this is probably over. I should probably exit my position, take my profits, move on. And that's exactly what happened in the subsequent days. Boom, this thing went for a quick ride down. It wasn't that fun. Now the third thing, it goes back to kind of these all-time highs that we were talking about. I'm going to use only this chart because we're looking at a very specific pattern here, and that specific pattern is called an ugly face pattern. And the reason it's called an ugly face pattern is kind of looks like a face. If we just draw it here, you kind of have, there's your face, there's your mouth, there's your nose. It's ugly. And we clear that one out, and we come here. Look, it's ugly, right? It's an ugly face. So when you start seeing ugly faces, what typically happens? I'm just going to draw one here. This is an ugly face pattern that you see. What typically happens to the stock price? It falls down. And if you notice what happened here, you had your left eye, stock price came down. You had your right eye, then what happened? It fell all the way back down. Here you had your left eye, your right eye. What happened? It fell all the way back down. When you start having ugly face patterns just completely failing at the top, you know that the next move down is going to be big. And here we go again. Ugly face pattern, and what happened? This one really fell down. Now, you're probably asking the question, well, why didn't you exit back in here when you had these 2 ugly face patterns? Because the trend never told me to, right? It all goes back. All of these things tie together. The trend never told me to go back and exit the position. But with this ugly face, the trend was telling me, all right, now red's rolling over. Plus, I had that block of red in the volume for 5, 6, 7 days. Plus, I have an ugly face pattern. Put all of those 3 things together, boom, your stock is going to go in the opposite direction. So these are 3 very, very big patterns that you can use to indicate a reversal in the trend, a reversal in the price, what have you. This is just part of it. I put together an entire curriculum just for you. You can go in and watch the Trading 101 series. It's a series of 13 or 14 videos. We have a very, very long 2.5-hour video that's chaptered that tells you everything that you need to know about trading, including chart setup, talks about reversals, talks about ugly face patterns, talks about volume. You have the community that you can rely on. You have me that you can rely on in the Patreon app. The link is in the description below. Try it for 90 days. I challenge you to try it for 90 days. If you don't like it, if it doesn't work out, no harm, no foul, you move on. But if you stick to it and you start understanding these patterns, this is a skill that you can use for the rest of your life. Don't look at it as, I need this to work for me right now in the year 2025. No, look at this long term. Look and say, in 2035, I'm going to be a better trader. 2045, I'm going to be a better trader. We have kids that are doing this. We have older people that are doing this. Anybody can benefit from this. It's very, very Simple and straightforward once you get on the right path with the right guidance, with the right information. I also have a PDF in the description below just for you. Print that out, put it on your computer, put it right next to your computer and reference it all the time. It talks about trend, it talks about volume. It's a very, very great tool to have right at your disposal. Now, I mentioned that long 2.5 hour video. I want you to go watch that next. It has everything that you need to know about trading. You need to go check it out, and I'll see you on the Patreon.